Hello and welcome back to the Financial Freedom Show. This week was pretty interesting. I had a couple of buys. Once I got paid, I bought $1,000 worth of SCHD. And then I got also paid from YouTube and I put it into Stag Industrial, which was about $100. That's from my other YouTube channel. So yeah, it's been an interesting week of ups and downs. But as you can see, over the past month, I am in the green by 4%, which is awesome. I am not, though, focusing on the short term, more on the long term. I'm going to be focusing more on SCHD and VU in the future. I think that was my last buy for Stag Industrial for the time being. And yeah, I'm just going to keep focusing on increasing my dividend payouts and my ETF holdings as the market continues to drop. Today we're going to take a look into SCHD and why I chose this ETF. This is a dividend ETF. It pays about 3.5% dividend yield. It's going to be lots of companies that are in their mature phase, such as Texas Instruments. There's also Intel and a bunch of other stocks that pay out dividends. Right now, my average cost is $68 a share. I plan on averaging down if the price continues to drop. Right now, it's above that average cost, which I'm totally fine with as well. That just means I profit, but in the short term, that's probably not going to continue. It's probably going to keep going down. So I'll just keep buying in, increasing my share count. My goal is to get this up to 1,000 shares in the near-term future. That's going to be through just constantly buying every time I get paid. And maybe even, depending on how low the market drops, putting some more cash in. As you can see, my current return on SCHD is about 7%, which is really good in the past month. That could change, though, in the near-term future as the stock market continues to drop. So yeah, let's review a little bit about SCHD and what it's comprised of. The fund's goal is to track as closely as possible, before fees and expenses, the total return of the Dow Jones U.S. Dividend 100 Index. It's a straightforward, low-cost fund offering tax efficiency. The fund can serve as part of the core of a diversified dividend portfolio. It also tracks an index focused on the quality and sustainability of the dividends, and it invests in stocks that are selected for their fundamental strength relative to their peers based on financial ratios. So once a stock is bad, it gets kicked out of the fund and is replaced with a new one. As you can see, the expense ratio is quite low at 0.06%. There are 101 securities currently in the SCHD fund. The distribution of the dividend is quarterly, and it increases over time. So you will get dividend appreciation over time, as well as the turnover rate right here, which is how much they kick out bad stocks. It's only 15%, so it's not too high of a turnover rate actively trading in and out of stocks. Their total net assets are over $35 billion, so this is a very large fund. And it was created in October of 2011, so it's got quite a decent history compared to some other ETFs. The ratings from Morningstar, it has been in the past been at the top 25% for the past 10 years, but it has lagged in the past year, which I find that as a buying opportunity. With such a long history, once the ETF begins to decline, I feel like the amount that you're getting for the price is a lot better now than it was 5-10 years ago. Here is their weighting of each sector. You can see the biggest sector is technology, and then financials, consumer staples, healthcare, industrials, consumer discretionary, communication services, energy, materials, and utilities. Their top 10 holdings, Merck is their top holding, along with Pfizer, Pepsi, Texas Instruments, IBM, Home Depot, Verizon, Amgen, Coca-Cola, and Cisco. And that makes up their top 40% of their portfolio. The rest is in highly rated dividend stocks that are relatively mature companies with a proven track record. So that is a brief overview of the SCHD ETF. I will be continuing to add to this position over time. My goal is to get to at least $50,000 or $100,000 in this ETF. I want this ETF for retirement. It's going to greatly improve over time my yield on cost for my dividends, as well as appreciation in the overall value of my portfolio. So I look forward to the next couple of months in this portfolio. I feel like we're going to get relatively better deals than we did in the past year for our yield on cost, as well as our value. For every dollar we put in, we're getting more value as the market goes down. I will continue to keep you updated on that as we go. Weekly updates on my portfolio performance, as well as what dividends I'm getting. So yeah, thank you for watching, and I'll see you next time.